Hello and welcome back to another demo video. In this video, we're going to do problem 3-8B, which is pretty much identical to your problem 3-8A. Now, in order to do this problem, they want me to do financial statements and closing entries. We covered this closing entries in the lecture videos, and we also discussed the financial statement presentation. I'm using page 136, exhibit 3-5. It has the financial statements in proper form. So I'm going to use those pictures as my guide to how I'm going to set up my income statement, my statement of owner's equity, and my balance sheet. So in the problem, they give us an adjusted trial balance, and we need to put together our income statement. So the first thing we need to do is make sure we put it in proper form. I'm going to select the first row. I'm going to pick just an arbitrary amount of columns here. And I'm doing this in order to establish my headers, right? So the company is Outdoors Incorporated. What financial statement are we doing here? Well, we're doing the income statement. Remember, income statement always comes first. What is my time period? Well, remember, the income statement is not a snapshot, but it's more like a video, right? It covers a period of time. So they tell us that prepare an income statement for the year and a balance sheet as of December 31st. So guess what? Our time period for the income statement is for year ended December 31. They don't give us a year, but that's okay. We'll just say 201X. Then I'm going to come down here and I'm going to, again, just arbitrarily, well, this time I'm not being arbitrary. I'm selecting the first 3 rows and I'm going to click Merge and Center, left align. I'm going to drag down, again, arbitrary amount just to make sure I got enough room for my revenues and my expenses. Why? Because that's what goes on the income statement. So the first thing I'm going to do is type the header revenues. Usually helps if you know how to spell. Okay, so now I'm going to indent slightly and I'm going to list all my revenues. Well, guess what? The good news is, nope, we got 2 here, right? So I'm going to type in subscription revenue. And I'm going to notice I'm not all the way at the end of the income statement because I want to save this column E, for my totals, okay? So I'm going to use column D as my subcategory, so to speak. So subscription revenues for us are $188,300. Then we need to list our second revenue, which they tell us is advertising. And our advertising revenue is $49,700. Okay? I'm going to indent twice, and I'm going to say total revenues are, I'm going to auto sum these 2. Put in my bottom border to show that I'm doing a mathematical function. $238,000. Next, I'm going to list my expenses. I want to make sure I indent all of my expenses. So the first expense we have is salaries expense. And the salaries expense is $120,230. Next expense is going to be the printing and mailing expense. And that amount is $85,600. Indent for my third expense, this case it's rent. And our rent expense is $4,800. The next expense we have is supplies. And that is $6,100. Oh, forgot to indent that one. Then the next expense is insurance. I'm just going to abbreviate. And basically, it's because I'm being lazy. That is $1,860. The next expense we have is depreciation. Oh, did not indent. Make sure I put my indents in there. That's $5,500. And the final expense that we have is income tax expense. And that is for $1,600. I listed all my expenses. So underneath my last expense, I'm going to indent twice. I'm going to say total expenses. And I'm going to, I'm going to auto sum this column. I now need to calculate what my total revenue is, I need to calculate what my net income is. I know it's net income because revenues are more than expenses. That's a good thing. To figure that out, I take my revenues, or my total revenues, and I subtract my total expenses, which is E16 here. And I end up with $12,310 of net income. So the next statement they want us to prepare is the balance sheet. Well, in order to do the balance sheet, we really need to do the retained earnings, right? So let me show you how we're going to do that. I'm just going to copy and paste my headers. No sense in recreating the wheel, right? I already did them. They look nice. I'm just going to adjust them. Now we're doing the statement of owner's equity. It's for the same time period, and I'm going to do the same thing. The first 3 rows of this financial statement, I'm going to merge and center, left align, and I'm going to scroll down. So let's see what we have here for retained earnings. Well, we have common stock. That's part of retained earnings. And we also have, obviously, retained earnings. So in order to do this, I'm going to set it up just slightly different, okay? I'm going to put in my common stock that was issued for December. And our common stock balance is $21,000. So I'm going to say common. And again, I'm going to come to the last row within this form, right? Our statement of owner's equity. And the common stock is $21,000. Nope. To that, I'm going to add beginning retained earnings. And my problem tells me that I have $23,220. Remember what we add to, or what increases retained earnings. We need to add any net income which we know our net income is $12,310. We also need to add any additions to retained earnings. Well, we can assume, based on what they gave us, we don't have any, okay? Then we need to think, okay, well, what do we subtract from net income? Or I'm sorry, what do we subtract from retained earnings? Well, we subtract any net loss or any dividends. Well, we don't have any dividends expense here, and we already added net income, so it really wouldn't make sense for us to add any net losses. We can then calculate what our ending retained earnings should be. Well, that's easy. I'm just going to add up my common stock, my beginning retained earnings, and my net income. We get $56,530. Now, remember, whenever I'm done with a row, I want to make sure I put my double bottom border there, okay? So I want to do that here as well. Okay, so we're good. We're moving along. Now I'm going to scroll over just slightly. Now we can do the balance sheet, right? I'm going to copy and paste this header. We're now doing the balance sheet. What's the time period? Well, it's as of December 31st, 2001X. So I'm going to say as of. And I'm going to do the same thing within my balance sheet. Let's move over just a little bit. I'm going to do the same thing. I'm going to highlight the first three rows here. I'm going to merge and center, left align, and I'm going to drag this down again arbitrarily just to make sure I have enough room for everything. Okay? So the first thing that goes on my balance sheet are my assets. So let's go ahead and just list off our assets, right? First asset we have is, well, obviously cash. And our cash is, $5,400. And again, I want to put my commas in there because it makes it look nicer, as well as easier to read, right? So the next asset we have is my accounts receivable. I'm going to abbreviate and just type in AR, A/R. We have 18,600 of those. The next asset we have will be our supplies. And the supplies balance is $4,200. Next, we have our prepaid insurance. And our prepaid insurance amount is $930. And then we have our equipment, right? So here's how we need to make sure that we prepare the balance sheet and account for equipment. So I'm going to type in equipment. Actually, I want to insert one more row. And I'll show you why here in a second. Okay. So notice the middle row is my subcategory. In this row that I just created, I'm going to put in my balance for my equipment, which is 70 grand or $70,000. Okay. Then I need to subtract accumulated depreciation, which in this case they tell us is $13,000. Why are you doing that? There we go. Okay, so I can now add my book, or I can determine, my book value for my equipment. And that's wrong. It should be 13,000, not 1,300. So I have all my assets listed right here in the totals. I can go ahead and total up all my assets. So I'm going to indent twice. I'm going to say total assets, and then I'm going to auto sum my cash, AR, supplies, prepaid insurance, the book value of the equipment, and I get 86,130. I need to double underline this because I'm done, right? I'm not going to do anything more with this. These are my total assets. The next thing we have are our total liabilities and owner's equity section, right? And to be even more, I'm going to merge and center this for my asset or for my total liabilities and equity, okay? And technically I could do the same thing up here for my assets. Probably should do that. Looks a little better, right? Okay, so now let's start listing off our liabilities. Well, first we need to put in our header or our account title, liabilities, and now we're going to list out our accounts. Well, the first thing that we have is accounts payable. Again, I'm going to be lazy and just type in AP. And our accounts payable are $16,100. The next liability that we have is our unearned subscription revenue. And that amount, they tell us, is $10,000. And then I have salaries payable. Oh, it should be indented. So let me go ahead and indent and list my salaries payable. And salaries payable, they tell us, are $3,500. So I can now calculate what my total liabilities are. I'm going to indent twice. I'm going to auto sum all my liabilities, and I get $29,000. So the next thing I need to add is my stockholders' equity or my owner's equity. Okay. Well, what do I have for owner's equity? Well, I have my common stock. And again, we want to indent that. And that amount is $21,000. And then I need to calculate my retained earnings. And I'm going to abbreviate and say RE. Again, because I'm being lazy. But don't be lazy. Okay, so what is our retained earnings, right? Well, we know the total stockholders' equity is $56,530. That includes the common stock that we had, the retained earnings, and the net income, right? If I put in this $56,000, let's just do it. $56,530. Okay? I'm going to underline this, and I'm going to double indent and say total owner's equity. And if I auto sum this, I get 77,530. So what then is the total liabilities and stockholders' equity section? Well, I'm going to add it up. I'm going to take my total liabilities plus my stockholders' equity, which is R22. Why did you do that? Okay. Oh, they don't match. Well, just for giggles, let's see what the difference is. Difference $21,000. Yeah, I know that. Because I took my stockholders' equity amount and I just plugged it in, right? Well, we're just looking for what's the retained earnings, right? Well, the beginning balance was right here, 21,000 or 23,220, plus my net income of 12,310. The total, if you add those two up, you get 35,530. So I'm going to plug that in. Hey, we balance. Now, if I add up these two, guess what that equals? $56,530, which is my stockholders' equity. Okay. Last thing I need to do, put in my double bottom border, and I'm good. And that, my friends, is how you put together a balance sheet. So hopefully this will help you out with your homework. If not, I'm only a text away. Text me, let me know. We'll discuss any issues or questions you have. Okay? So thanks for tuning in, and we'll see you in our next videos.